Hello everyone, welcome to Tuesday session or UK session of a Tuesday, and it's wonderful for you to be, well, for me to be here and you to be with me at this point in time. Ash will be with us in a second as well, I'm sure. And in the meantime, what I'm going to do is have a look at what news we can expect for today. And if my memory serves me correctly, that ain't too much. Let's take a look. There. And you guys should now be able to see my screen with any luck at all. Just give me 2 ticks and I'll open up what I need to open up on my other computer. But you can see there that there's not a whole lot of dramatic news or data releases today. Again, so question kind of comes to me, well, what's going to make this market move? Well, I guess through all sessions yesterday, we saw a little bit of dollar weakness, maybe even a tad more than a little bit of dollar weakness for no particular reason that we saw on the news events, unless we, of course, we go back to last Friday and we spoke about that yesterday, of course. But that seems to be the reason. This one here, the average hourly earnings month on month out of the States, which was not a good number. And that if it needed to have any more impetus to the downside, has certainly, it would seem at this point anyway, have pointed to a weaker dollar, and we're seeing that again today at this point. Let's take a look at what the market is thinking at this point in time. And you can see that through the euro and pound, even through the dollar, yen and Swissy, that there is indeed that little bit of dollar weakness. In fact, it's right across the board. And really, if I have a look at that, the past 48 hours has given us... Look, you really can't say it's dramatic at this point, but certainly it is moving away from the greenback and towards the other major currencies. That would certainly be the case from that chart. What next, I suppose, is the question. And for mine, it's kind of this time of the week, I'm starting to wonder where the picture is coming to, or where that picture is going to unravel. And I normally look for not so much signs of breakouts or anything like that. I'm normally looking to say, well, is the market trending or is the market ranging? And if I look at this euro chart and go to the daily chart, oh, by the way, we are now out of both short positions that we have been in for 2.5 weeks, something like that. So trailing stops have now been hit, and we're looking at a different ball game entirely. Why are we looking at a different ball game? Well, it looks as though at this point in time, the euro wants to have another crack back in this range, and I'm certainly a fan of that. But a little difficult to jump on board right now. If you didn't get the first entry, then a little bit of patience here is required.
Hi, mate. Sorry.
Hello, mate.
Dave, we haven't got any of your charts.
Oh, why is it so?
I'm not sure.
I'm not sure either. Hang on a sec. I did do all that. Let me go back in time. Okay, let's try again.
That's better.
Are we good?
Yeah, that's better.
All right, okay. And how are you, mate? Just while you're there.
Yeah, not too bad. It's not too bad at all. Just trying to kind of get everything back to normal. I don't know why, but I just can't get my 2-year-old out the house in time to sort of sit down and actually do any work. So yeah,
that can be a problem.
Yeah, mate, I mean, fortunately it's not before the market, so it's not a major hassle. But Yeah, she's just having a one of those periods, I think, where everything's
That's
a
a 2 year
problem.
old, mate.
Yeah, exactly.
Yeah, the period lasts from when they first wake up when they're 1 year and 364 days, and then it ends when they're 29 years and 364 days. Hopefully
Oh,
they've moved out at that stage.
yeah, yeah. Oh dear.
Anyway, I'll go through these majors and then we'll come back and have a look at the footsie. Eh?
Yeah, absolutely.
All right. So talking about the euro as I was, there's certainly signs here that this can reverse, and I'm on board with that, as I said. But getting into this market right now is not a great plan of mine because I need to wait for some retracement. The bar we saw yesterday was quite decisive, and if you got in on that from the early moves, then happy days. You got a good ride. I failed to do that, as I couldn't really see an entry there for me, apart from maybe here, and that was just a little bit too dangerous for mine with that bigger candle. So I'm happy to wait for the break, as we've now had the break of the neckline and a retracement back to the daily pivot, and retesting that neckline today would be absolutely perfect for an entry, and that's where I think the money is in that second rally, and that's what I'll be looking for on the euro. Am I entertaining re-entering short? No, not at this point. I think we've got plenty of evidence to suggest that this is going to have a run at maybe 113.60 again, maybe even back to the top of that range around the 115 mark. And as I said, I'm completely on board with that, and I'm happy to join the party if it comes back and gives me an invitation. So that's what I'll be looking for today. Can I trade it down to the daily pivot? Is, I guess, the question that needs to be answered. And as always, I'm happy to entertain that thought, given that we've got an untested daily pivot. Kind of adds to the flavour. I'd be willing to trade it if I got a break here and hit either this resistance level or the high of yesterday, then got back underneath here and retested it. I think that would be a reasonable position to take, and there's an obvious target here, as I said, in the untested daily pivot, or maybe even the trend line here, if you so chose, which is the neckline that we showed you before. No need to keep that one there anymore. So yeah, I'm okay with that. Is there any reward to be had here is probably the next question. So you're looking at entry maybe around here somewhere, risk of, I don't know, maybe 10, 12 pips, something like that. Your reward isn't much better, but if you take profit there and allow something to stay on the table, maybe you could entertain an area down here as well. A weekly pivot retest, not out of the question. A trend line retest, not out of the question. So yeah, I'd be okay with that. But if the candle's much bigger than that 10, 12 pip mark, then I'd probably not be interested. It's going to all depend on A, if it sets up, and B, where the entry will come. So that's the euro. Quickly go through the Aussie. Aussie, yeah, kind of disappointing because it was and have been bullish this cross since last week when we saw this happen. Actually, it was a week before, or was the week before that. It's ages ago now. Anyway, let's say that. It's last month, I'll put it that way. We saw this tweezer top on the monthly pivot, and I keep saying that you would expect this then to drive straight down to support. Look, it didn't really do that. If you take the support level to be the bottom of the range, didn't do it. Eventually it did. But when I see that and I don't see a follow through, then I think, well, something else is happening here, and that really needs to be a bullish run. And maybe we're seeing that right now. I'm disappointed because A, I was in this long beginning of last week and chose to close it, and B, I was looking for a retracement yesterday off the back of a potential lower high in this vicinity. Well, history will tell me that didn't happen, and we had 3 very strong 4-hour bars, and today we look to be on the same path. at this point anyway. There's nothing I can do here except watch and wait, and that waiting is going to be exactly the same as what I've described on the euro. I need price to get back down to here, which it's already done today, mind you. It's already retested the trade line or trend line, hasn't tested the daily pivot, so it remains on watch for me, watch and hold. But I don't know that I'm going to get an opportunity here. This looks to be very strong and is taking on this high already, and that may well mean we're going to take this high on and maybe find resistance at that confluence area. That's what it looks like to me. Then I have to consider, would I be willing to trade against that to play a daily pivot test or the retracement? Oh, look, I think I'll cross that bridge when it comes, to be fair. I don't think I'm a massive fan, but definitely there's room here, or a call here really, for a pause in the bull move. So I'll be expecting some sort of bounce here. How far is, of course, debatable, and I just don't know that I'd be willing to trade back to the daily pivot. We'll see what the setup looks like if it comes. And finally, I'll just go through the other major, the pound. Pound has also taken off. This was a tale of woe, one of those stories yesterday where timing is everything, and my timing was wrong. It did exactly as I thought it might. It came up, tested the weekly pivot, back down to the daily pivot where it gave us a higher low, and now it's taken off. As I said, timing's everything, and my timing wasn't right yesterday, and that one failed. There is, of course, or was, of course, that's now gone. There was, of course, on the 4-hour chart late yesterday, the opportunity to trade this bar. Risky, but it's very much the same trade as I was trying to do on the hourly chart, except that there was absolutely no room to take profit here. But, this has panned out exactly as we said it would. We got the weekly pivot test. We bounced off it back to the daily pivot, got the higher low, and away she now goes. Very frustrating when that happens, but not a whole lot you can do about it, I'm afraid. If there's no entry, and there was an entry there, if you're in front of the market at that time, but high risk, as I said, it may well be on the way to a good reward. However, I'll still wait for another higher low, maybe off the monthly pivot. So resistance down here, give me a higher low. That may be the entry that I'm looking for. But there's also, of course, as I understand it, a law being passed in Parliament last night, Ash, that says we cannot have a no-deal Brexit no matter what. Is that right?
There is something I was just reading about that, actually. Let me just find it again. I was just actually had my focus on a headline that I've just read. Donald Trump looking to put tariffs on EU goods, helicopters, and the like. Yes, Brexit delay bill gets royal assent and is signed into law. So it's a delay rather than anything else. Let's have a look at it. Vivek Cooper's backbench bill aimed at forcing Theresa May to request a Brexit extension rather than leave the EU with no deal has been signed into law. The cross-party European withdrawal number 5 bill received royal assent after it was backed by MPs and peers on Monday night. It places a legal requirement on the PM to seek an extension to Article 50 in a bid to prevent no-deal exit from the EU. PM is to meet Macron and Merkel this week, and also there's an EU Brexit emergency summit. The Commons backed a series of Lords amendments to the bill after it was rushed through both houses of Parliament. And I think this is quite significant, actually, because whether that happens in the House of Commons, it has to get pushed through the House of Lords as well. We do have two houses to kind of it's meant to balance things out. It's meant to balance bad decisions out, really. And this was something that was voted on by one vote. It won in the Houses of Parliament to delay Brexit, and now it's gone through the Lords. Then that does just kind of show the appetite in the country for a no deal. It shows an appetite in both houses for no deal, and it's just not there. So calls on Mrs May to lay a Commons motion on the extension of Article 50, which could then be amended by MPs. I think the other significant thing is it's just going to show that the PM is just lacking any leadership power. The fact that Parliament have taken control and they've managed to get something through. This is the first thing that they've got through, by the way. I mean, we've had quite a lot of votes on a lot of things, and this is the first thing that they've managed to get through. For sure. Yeah, I mean, it's interesting, isn't it? Because all the things that were genuine decisions, nothing passed. But when it came down, nobody would budge on a genuine decision on how to move forward. But when it comes down to I suppose delaying and buying room for time and for things to get kicked down the road, putting things off. Everybody voted for it, and it's a little bit like having a dirty kitchen or something, or a messy front room that you kind of like, oh, we'll do it tomorrow,
or making your bed.
Let's just do it tomorrow. Or making a bed. Yeah, we know that there's
I keep saying to my wife, you're going to get back in it in about 12 hours. What on earth do you want to make it for?
This is the thing. So
it's kind of like that.
Well, it is. It is. And yeah, so it's been pushed down the road again. What that's done to the pound. Let's have a look at the pound again briefly, and we'll have a look at the FTSE subsequently. I don't think.
While you're going there. This is a predisposition, of course, or a supposition that the EU will rubber stamp this. And again, we go back to it only takes one country to say no, and where are we then?
Absolutely right, absolutely right. And there's this important meeting tomorrow. So, I guess we don't really get any genuine moves on the pound until tomorrow. We're probably much more likely to get any moves on the pound tomorrow rather than today. So yes, it does rely on that supposition that that the EU do pass it through, and as I say, we'll know tomorrow. Theresa May is going to meet Angela Merkel, and she's a bit of a supporter. The girls are kind of trying to help each other out. Angela Merkel's quite supportive of Theresa May's plight and quite sympathetic to her plight. So if she's going to get anybody that could help her in the EU, then it will be Angela Merkel. And given that given that she's probably the most important country. She probably runs them. She runs the most important country in the EU. Then there'll probably be some people that will go with Angela Merkel. There might be some that like Greece, possibly that feel a bit grieved by how Germany is managing to take advantage of the EU when they are not. So there's a chance that she fails. There's still a failure, but I suspect they probably will pass it. The chief negotiators, Michel Barnier and Donald Tusk, have both kind of come out and said that they are quite happy with what they called a flex extension. So I think it probably will pass. I think it's got
come
a good
with
chance.
A hefty price tag, however.
Yes, you would suspect so. The problem that everybody's got is that time is not a friend for this Brexit scenario because of the EU parliamentary elections. The MEPs need to be elected, and that means that if we are still part of the EU, that means we have to throw up some MEPs. And Article 50 couldn't have been triggered at a worse time. Probably would have been better to wait until June or July, I suppose, 2017, rather than doing it in March, because it just meant that we only had a 3-month time window to get this sorted, or 2-month time window to get this sorted before those European elections, and everybody knew they were coming. So we would have been better off probably triggering Article 50 after that had happened, or way before, I suppose. Actually, that wouldn't have worked, would it? Because you'd still have to have MEPs elected from the UK. Now, there are some Brexiteers who have said that
maybe that's part of the price tag.
What, that there will be people voting?
No, that they lose their rights to do so. Also,
What to have to throw up MEPs?
I don't know what MEPs are, but
Oh, they're just the
member
members
of
of
the
the
European
European Parliament.
Parliament.
Yeah,
Yeah.
yeah, yeah. But the
Yeah.
UK is obliged to have, you know, if they're part of the European Union, everybody has to have MEPs. And while we're still part of the European Union, that means we have to go through those elections. And if Brexit doesn't happen for whatever reason, then they'd be kind of missing a trick. So that they kind of have to go through this process. They have to throw up these MEPs.
Yeah, that was kind of what I was saying. If they did stay, perhaps
Yeah.
that's the price tag, that they don't have any MEPs.
Well, yeah. I mean that's one way that they
You've got no
probably could
rights
have.
anymore. You can be here, but you don't have any voting rights. You can't come to the table.
Yeah, I suppose the difficult thing with that is that the European Union don't want us to leave, so it won't be in there. And all that would do is put the UK government into the position when where they'd say, well, if we've got no MEPs, we've got no power, then no deal is the only possible option. So it's a very tenuous situation now. You know, it's very very difficult to navigate around this. But
I think
Jacob
I'm making
Rees-Mogg.
it up as I go as well. So,
So are they, mate. I don't think you're in any worse position.
True.
But Jacob Rees-Mogg, a prominent Brexiteer, has said that we should throw up these MEPs and just make sure that they cause as much problems as possible. You know, when European laws are getting passed, and you know, there's some bitterness on both sides. Theresa May has again ruled out a second referendum. And she's also ruled out a customs union, which really kind of completely scuppers any deal that they're going to have with Labour. So this is what I mean about kicking it down the road. They're no closer to sorting it out than they were 6 months ago. You know, they've moved forward none. Theresa May's deal has been rejected 3 times. She's not likely to get it through. That deal is probably dead in the water unless she bends on something that Labour are asking for, or she bends on this second referendum. So she's she really, we're in all sorts of problems here, and the chance that Brexit may not happen at all, you know, almost by default as they kick it down the road, it starts to become more prevalent. But the issue is there's this kind of possibility that it could happen at any time, and nobody's feeling comfortable. So until we get a proper decision whether we are staying or leaving, the pound is always going to be a little bit tenuous and difficult to trade. But we can see what's happened this morning. Maybe off the back of some of those announcements that you know that they put through the so the deal went through the Lords yesterday. We saw the pound retrace a little bit. It's now broken through the weekly pivot, which would suggest some further upside. So we see the pound following the euro, and also if we compare the euro to the pound, then the euro actually also is weakening against the pound this morning as well. So I think that the pound looks a bit more attractive today than it has done recently off the back of that news and data. How does that affect the FTSE? Who knows? It depends how significant that release ends up being. FTSE's weakening a little bit. I wonder whether the FTSE might weaken off the back of the fact that we just had that announcement that Donald Trump is looking to put some tariffs on some EU goods instead, which I will just see if I can bring up again and have a look at that, because he's at it again. Interesting, really, with Donald Trump, because you know he's such a keen advocate of markets going up. And constantly on the back of the Fed to not raise interest rates to help those markets get buoyed. And yet, if anybody destroys the market, you know, if anybody's more successful than destroying the market than Mario Draghi, then it's Donald Trump. And it came when he started the trade war with China, and now we have the headline: Trump threatens new EU tariffs on helicopters, motorcycles, cheese, and wine. So effectively, I don't know who makes helicopters. Motorcycles, I would suspect that that Germany probably, as the one of the biggest motor industries, will probably be hit by that. Cheese and wine is France, so you know he's hitting the big ones. Keep an eye on Trump's other trade war. But yeah, there's just quite a lot. Kudlow says US-China deal closer. So there's a few, I suppose, positive headlines, but Trump has now started to throw his eye over to the EU.
Flexing his muscle again, and you know, it's nothing he didn't say he would do.
No, absolutely. And what's interesting, so the market has just opened up. Let's see how it reacts this morning. The weekly pivot is obviously an attractive area. We need to probably get through this fairly quickly. The weekly pivot down here is obviously an attractive area. The really attractive area is this high here. That's where I'd love to get in if I could, on the upside, which is almost 100 pips to the downside, you know, before we see that. Now, to cause a market to come down 100 pips, it's got to have something significant happen. Now, a trade war is significant enough to push it down. It depends how that story develops, and it depends how twitchy people are, because the problem with the market is that it has been so unbelievably excited with a move to the upside. You know, it really hasn't had a retracement. Now, when I look at retracements, I imagine gaps. I almost think about you know, price moving in when it jumps without testing. It looks like a gap to me. So an example would be this one here, no test. So there's a gap. There's this gap here, and gaps tend to be filled. Now, I'm not saying that that's traditionally the way that markets are looked at, but that's the way I look at it. And when I look at this, there's no retracement. So there's a gap here. So we've got two gaps really in the trend to the upside, and gaps do tend to get filled. So the market is probably waiting for the next piece of good news. Now, when bad news comes in, what's it likely to do? And the answer is take profit. So if it's taking profit, does it want to get back in when we see weekly pivot areas? If it's taking profit on something which is potentially quite bad for the market, or does it wait for some further downside before it tries to jump in? You know, before traders start to jump back in again. And that's the question. I haven't got the answer to that. It's you know, it's rhetorical, but it is a question that I want to see answered. Now, the only way we can really answer that is to see how price reacts to the weekly pivot. Because what I will say is that there's a very, very high probability that we see this weekly pivot tested. Now, that's for a few different reasons, but we'll have a look at the barometer in a moment. Probability of today being what we got here. This is, oh, we do have, oh no, sorry, this is April here. Oh no, we haven't done that yet. I haven't done that yet. This is sorry, April. The probability that we see April. Oh, I haven't got that one open. The probability that today is a bullish day is pretty high, you know, and I will bring that up because I think it is important, actually. Hold on. So looking at downside is not so simple. However, let me bring this up. There we go. However, we have to consider, you know, all the information that we have just to kind of like help us with our trading day. So we are in trading day. What's the date today?
9.
The 7th trading day. Yeah, we've had a weekend, haven't we? So trading
day. Sorry, I don't know.
Trading day number 7 of the month, and that has a 70% chance of being bullish rather than bearish. So it's really tomorrow that that would be the day that you'd be not looking for downside, but if the downside shaped up tomorrow, it would have a higher probability of coming down. And then into Thursday, it gets a little bit above 50%. But again, you know, when we get towards the end of the week and into the start of next week, that's when it suggests that the dip will come. So this one might be an anomaly. This one might be an anomaly. You know, it may not go to pattern, but it certainly suggests that today would be a little bit less likely than tomorrow. So I think we're going to see the weekly pivot. That suggests it may not be seen today, but we do have a story which could develop and give us that you know, allow that probability to change. Now, the other thing is that obviously we could come and see the daily pivot and bounce, so end up closing above its open. That's all that's telling us, is that the price is likely to close above its open. So it could bounce here, and then tomorrow we genuinely start to see a a move to the downside. So I'm going to watch out for this today and see how that story develops, see how the European story also develops. I think is going to be key and important as well for trading today. But what it does tell us is that the news and data does not suggest that this breaks from this point to the upside. So we are in a little bit of a holding pattern, and we are waiting for the next bit of data to kind of, or news to really push this market in one direction or the other. And the two things that we have on the table are the EU summit, and we have which could affect the pound, which could affect the FTSE, and we have this potential for a trade war with Europe. And what's interesting is that the Chinese announcement that they're closer than ever could already be priced into the cake. You know, that might have been baked in by now, because we kind of knew about the trade wars going better, which is why we've had such an amazing rally. But you can see that this is starting just to curve to the downside, you know, somewhat. And we need to see some breaks. It would need to give up the weekly pivot, and I think that's probably going to be a significant announcement rather than anything else. But retracing down there, I think there's a higher probability that's going to happen now.
So that range is going to continue, we think.
I would suspect so. I think until we get something a little bit more solid, because the other thing is, and this is the thing about trading days, you know, there's different ways that you can read those statistics, and sometimes you have to read the statistics through trading days, and sometimes you should really be looking at Mondays, you know, certain Mondays of the month. So you have to be a little bit cautious around about those, which is why they are soft markers rather than, you know, hard markers. The hard markers come from price action, and well, they're harder. Nothing's obviously absolute, but the hard markers will come from price action and data and press releases. We haven't really got anything today that
no, it's
would
pretty
suggest.
quiet.
Yeah, there's not a lot out there, is there? I see that the Aussie's home loans month over month has helped the Aussie dollar out a little bit. FOMC member Quarles or Carles is speaking, and Clarida as well is speaking later on. Maybe that does something. That's quite a lot later in the day, but it's tomorrow really that we start to see. And again, you know, looking at those trading days, it does suggest that maybe tomorrow we do start to see something. ECB press conference. Is that the minutes? No, that's a press conference.
It's the conference. Yeah,
that could be interesting. That could be interesting. Mario Draghi last time didn't say anything that seemed to bother the market, which I thought was, you know, he didn't say anything, to be fair. There wasn't anything that I heard that was that significant. So those monetary policy monetary policy statement might be the time that we start to we get something of some direction. He wasn't overly positive by any stretch, but he didn't say anything that significant. It was almost like he was skirting around the issue. So I think this press conference may well be the interesting point. CPI, massive number, really. We've seen inflation drifting a little bit. You know, there's no pressure, there's no upward pressure on prices. Now, if the upward pressure starts to come, that's when we're going to start to see the market start to genuinely move. We're looking at dollar yen. We're looking at, sorry, not dollar yen. We were looking at dollar yen, weren't we? Yesterday. We were looking. Oh, we'll come to that in a moment as well, mate. We're looking at dollar, euro dollar. We are looking at pound dollar as well. Really interesting. Watch out for that CPI. If CPI is tepid, that is going to start suggesting that euro really could catch a bid and get to those prices that we've been talking about. Same with the pound, actually. You know, even with Brexit going on, it's the same with the pound. The pound could also catch a bid. Same with right across the board, dollar CAD as well could well start to move to the downside. So we might start to see that the CAD strengthen and the US dollar weaken off the back of that CPI number. So the CPI is going to be quite key. We have seen last week we saw NFP come out weaker than expected, stronger than expected, but with low wage inflation, and that's the key aspect. There's no wage inflation in the United States, which means that there's going to be very little appetite, because there's going to be problems if prices are rising. There's going to be problems for the Fed, because the workers won't necessarily be able to absorb a hike in interest rates. So I think CPI is quite key, and it does suggest that tomorrow is the day. Let's have a quick look.
I think that's why we've got a cap on the pound at the moment. You know, it has moved, no question, but it hasn't moved dramatically, and now it's come off again a little bit so far today. Well, in this session anyway, Asia saw it rally, but the GDP figures are predicted to be down, and that would not be a surprise. That's kind of a trend worldwide at the moment. So that's probably putting a lid on the pound until those numbers are released, I would have thought.
So the other market I think we should discuss as well is gold, because I like gold, and I really like gold for some upside. It's a little bit high here. It's a little bit high here for me. I'd like to see it just a little bit further down, maybe come into this trend line area over the course of the next couple of days, and then I think gold is a buy. I would probably want to wait for that CPI number before I buy anything against the dollar. So I think looking at tomorrow, after after lunchtime, we need to be looking and be focused on CPI, because I personally believe that if CPI is weak, we do see the dollar weaken significantly, and things like gold, the euro, maybe less so the pound because of Brexit, but certainly some of those crosses actually could be really good. Oh, and the yen. You know, what happened with the yen in the end?
Yesterday?
What was the right choice? The
right choice was B, because you'd be out now.
I see. Yes. You would be out. Yeah.
And you know, the interesting part was, and we now see it very, very clearly.
Yeah.
I'll show it to you. Where's my thing? There it is.
Yeah, what a bargain! It's an interesting one, isn't it? Because actually, price, you were right on the price, but because of the management, it would have tripped us up.
Yes, absolutely. You know, if you'd put your stops up here, you're okay. But you know, that's a pretty poor risk to reward. Then, if you're going to enter here, put your stops here, 50 pips down to, you know, you're less than 1-to-1 to a major level of support. So I wouldn't be doing that. But the trade slingshot style, or my style, is to put the entry here and the stop loss here. So you would have been in and out at this point. But significantly, you know, if you have a look at this, and if you don't believe in trend lines, then this is an absolute classic case in point, where we did have the break. We almost had the retest, but we didn't. And then the price just meandered on and on until it did, to the pip, retest that trend line and fell away. Now, I'm not saying this is now the time that it will go, but what I am saying is, if you wait until that happens, you've got a far less likely chance of exactly what did happen. Had you entered here, you'd be out, you know, by not following that particular point of interest. My case was for waiting on the daily pivot, the daily chart, and either today for price to come back with a bull bar, or tomorrow for price to come back with a bull bar, and that would be my signal to go short. So, you know, waiting it may not yet provide a trade, it may not yet give you what you're looking for in an entry, but at this point in time, that decision is sound. So look, and you know, I'm not committed to the shorts, Ash, to be fair. It's just a potential setup. And you know, if you look at, and I've been saying this as well, if you actually look at the daily chart, where we've had, and I know this is a major retracement on a bigger picture thing, but it is now a major retracement turning to trend for me. And the only thing that's really upset this climb to maybe even 113, 114, was this little sell-off here. But that's proven to be false, as we discussed. And now, there's no reason to think that we won't take on these highs, to be absolutely fair. And again, that's probably why it's worth waiting until you do get the perfect setup. And if it doesn't come, it doesn't come. But it may well save you getting into the market too early. So, and that's the whole point. So unless the setup's good, I won't be going short. I'll definitely be waiting for the right setup here. And the right setup is to get a decisive break of this trend line here, and then a decisive retest of it. And that hasn't as yet happened, and may not. We'll see.
Yeah,
so that's what happened with dollar yen. not a whole lot, to be fair.
Yeah. Well, should we have a quick chat about the Aussie CAD as well, because that was also something that was in focus.
Yeah,
so
you liked that, didn't you? Did you get into
I
it
did.
or not?
No. I think there was some waiting that needs to be done, and it's been quite interesting. So let's have a look at it. We were talking about this as a potential daily wave rider, and it needed to close under some specific levels, and it has done that. Let's just bring this up like this. It has done that. There is an evening star pattern here as well, which I really like. So there is an entry now. Now, I don't know whether you would have got pipped into this. Possibly. Just see what that low is there. 0.9480. 0.9477. So no, you shouldn't be in this. Shouldn't have got in this trade just yet. So that under this low, everybody knows the amount of pips you need to do. But yeah, there'll be an entry set down here now to enter this market. It doesn't quite suit my particular setup. What I would want to see is just a little bit of consolidation here, and creating something on the hourly chart probably. Yeah, it's not ideal actually, which is a shame. Let's have a look. Yeah, it's not too bad here actually. Not too bad here at all. Let me just double check one other thing. This is a definite sell zone. It's a definite sell area here, but I'd probably want to just see it develop on at least a short-term time frame to start a short-term downtrend. This is a 15-minute chart here. I think you're going to get pretty much the same price points here, but I still really like it. I still really like it for some downside. There's the trend line's been refused. A little bit of a movement back to the downside, probably breaking this low here and retesting it would be enough. It is going to kind of it's going to run into a little bit of price action down at this point, but remember this is only a 15-minute chart, so let's see what that looks like on an hourly. Yeah, it's likely to hit a little bit of a support level down here, but we get through that point, then that is going to be significant, because now there are setups on longer term timeframes. There are going to be orders under this particular level here. That's yesterday's low. So there are going to be orders, and they're going to be sitting somewhere around about here, just to kind of give it some room to come down from the daily. So I think if there was a trade in here somewhere, then there's an opportunity to get down to this point and beyond. So I still really like it. I think that there are potential trades already with this one. We've hit a sell zone, but we haven't even got a 5-minute chart that's started to trend to the downside. So I don't really. I think this would be a shade early, or the other possibility is that we work off the candle. So there's a few different ways that we could enter, but it's not there as yet, because this may not be the resistance point. And I just want to check what that looks like with pivots. Yeah, there's actually a couple of pivots that sit underneath it as well, which are going to make it also a little bit tricky, which I'll bring in now.
I was actually a bit fortunate with this one. My internet provider has conveniently cut off my internet today. I've managed to find a phone that actually pairs to my computer, thank goodness. And this morning, I would have actually taken this trade short already, and I would be in a spot of bother at this point in time. But
Yeah.
there, and I'll show it to you in a little bit. It's kind of a double cross on the weekly pivot, but I'll show it to you in a sec.
Yeah, I mean that's when technology can actually work in our benefit, right?
Yeah, a stroke of luck. I'm not. I actually, because we do a morning webinar, I put that through to Lloyd, who was doing the webinar for me. But the only candles I could see were these two candles here, and this one hadn't even closed. I didn't have a chart. I couldn't even look at a chart. So I just said to Lloyd, okay, I'd be short underneath this bar here. And I'm not sure how he communicated that to the group, but hopefully, and he told me, look, price has already gone past there, and I don't place limit orders, but hopefully nobody's in that at the moment, because there's bound to be a better entry at some stage.
Yeah. Okay, mate. Well, just I suppose, so would you now be looking at this under the weekly pivot, maybe daily pivot, weekly pivot?
Oh, look, we're already there.
Yeah.
We've had a couple of closes on the 4-hour chart below the weekly pivot. That's probably good enough for me. I know the daily chart isn't really as decisive as that, but it has already closed below the weekly pivot as well. So I'm not hung up on that. I think I'd be willing to trade it if the setup's there. And significantly, we've had the big bearish engulfing bar on the 4-hourly chart. We've had break of the weekly pivot, as we suggest. We're now back above it, which is a little bit of a concern. But if there were to be a strong setup now, I'd be willing to trade that. I do believe.
Yeah.
But we're not there.
Okay. Yet. Not there yet. Well, let's just quickly get onto the FTSE. The FTSE, or back to the FTSE, I should say. FTSE has opened up.
EuroCAD, because EuroCAD's interesting as well.
Oh, brilliant. Okay. So let's just quickly check the FTSE. The first 15-minute bar was this bar here, which is suggesting some indecision in the market. We know it's got a 70% chance of closing above its open today. And let's bring in the barometers now. So not that one. Sorry, I need this one here. The barometer here is suggesting that the market has actually opened fairly positively. We have currently 62% of stocks in positive territory. Now that does not promote downside. So there's, the market has basically opened up. Now all this really gives us is what's the sentiment in the market so far, and what it's telling us is that any news that has been announced, any headlines that were announced, specifically that Trump headline, is not going to be that significant in the opening session. And what that means is if the FTSE does push down to the weekly pivot, that is our buy area. This wouldn't be so good. We're under the daily pivot. We got no room for anything. Yes, it could start to take off from this point, but it's not looking that likely. So we've got to consider what we have in front of us. So firstly, probability. Upside. Secondly, the breadth is upside, currently upside. Thirdly, the overall trend, when we look at this on longer term timeframes, upside. So we're still looking for upside so far. Then we get to what could be the drivers of the market. Now, this isn't in any specific order, obviously, because the drivers, in my opinion, would come first. The drivers in the market actually today are a little bit negative, potentially. The fact that they're announcing more, the deal is almost done with China, it's not that significant. The deal isn't done as yet, and the market already reacted off the fact that the deal was close. So that's probably baked in, and it's probably been priced in. Now we get to the EU trade war announcement. That's a negative. So we're not looking at really the market taking off on that particular aspect either. But it's a negative which hasn't developed, and it hasn't really, the headline is considering, and I think that the word considering is the key aspect here. Threatens, he threatens new EU tariffs. So he's not actually put anything on, but he's just threatening to do that. So until that becomes a little bit more prevalent, I don't think we need to be too concerned. But it does mean that trading a market to the upside with some data and news which is a little bit negative would not be the best possible idea. And obviously, lastly, would be the Brexit negotiations. So with the pound potentially strengthening off the back of Brexit negotiations, also that, and we're just talking about today, not talking about what might happen tomorrow. But with that happening, that doesn't suggest upside. So I think that what that tells me is that we have a mixed bag. And with a mixed bag, we're probably looking for a retracement, but we're probably not looking for anything too deep unless we get a story which does develop. So that is what's pointing me to this weekly pivot. Now, it's also going to be important to bring in a few technicals. I'm just going to bring in a quick fib of the move so far. Now, this is really where the trend really started to kick, and that really does say to us 23% retracement is just below the weekly pivot, but it's close enough. It's like 6 pips, 7 pips from the weekly pivot. So there's a 23% retracement, which is still a very bullish looking trend. And we also have the fib from last week, which is this one here, which also brings us to the same area, 23% retracement on that fib as well. So there's quite a lot in this area. That is really suggesting 73.30. So we're looking for a 40 pip dip, and a 40 pip dip is the buy zone right now.
Righto, let's have it. When do we get it?
Well, you'd kind of look for it this morning, but the market breadth at this current stage is not suggesting that. Let's bring that up again. Look at that. That's fairly significant. This is now down to 55. So we started at 62. We're now already down to 55% of stocks in positive territory. So there are 1, 2, 3, 4 that are flat. So that leaves 41% in negative territory. So that's changed already. And that might be something that we need to keep our eye on. How does this picture to really develop? Because if the picture does start to move more bearish breadth, then I think the shorts will probably be much more likely to happen in the early session. So the open didn't suggest it, but as maybe some of the traders make some choices, maybe it starts to change. It's not really changing significantly yet, though, mate. So possibly this afternoon, maybe this morning. We'll just have to wait and see, mate. But it could even be as late as tomorrow. Remember, tomorrow is the first significant day where we get a probability of closing below its open. So it could be as late as tomorrow.
It's also the first significant day of the week in terms of news events and data releases. So
yes, it is. Yes, it is. Which also could cause some wrangling and some positioning. So yes, you're absolutely right. Yeah, it could well be as late as that, but we're certainly looking for it.
There does seem to be a little bit of a market appetite for pips at the moment, though, and not necessarily in a single direction. Let's take a look and see what the majors are doing. Euro started on a downward path in the first 30-minute candle of the session, but has recovered very, very quickly and now looks to be taking on the high of yesterday, a significant high from yesterday, of course, because the market moved. How many pips was it at the end of the day? 65, all in one direction, pretty much. So the average range of the cross remains pretty tight, but when it's all going in one direction, you can obviously make money if you picked up the right entry. There's a nice entry there. Where were we then? Don't know. Anyway, yeah, this looks like it wants to have a crack at this high and looks very, very keen to get on with the job. That's sad because I want it down here so I can find an entry to join in the bull run. The Aussie, look, that's the daily candle, of course. The 30-minute candle is very much similar. Came off a little bit. Now it's looking to just continue that complete obliteration of all resistance levels.
Would the housing numbers made a big difference today with the Aussie?
They're tomorrow, aren't they? Housing numbers?
We did have something today. I just
did we?
Yeah, we had let me just see up next. We had home loans.
Okay. And they're better than expected. Wow.
Much better, yeah. We had a -3% forecast, and we hit a 2% actual.
Wow. Yeah, that's interesting that that's even positive, because is that month on month, is it?
Let's have a look. Yes, it is, yeah.
Okay, not so significant. If it was year on year, I would say that's an amazing number, but it's impossible for a year on year to be positive on the Aussie housing at the moment. It's just not possible. Such as the state of the market, down around 11%, I think, in the capital city. So anyway, getting back to the real issue, and just impossible for me to jump in here. There's no way I'll be looking to trade it long, but you can see that is powering on, as well as is the euro. The one cross bucking that trend in terms of the majors versus the US dollar is the pound. As we suggested, there may be a cap on this until those GDP figures are announced tomorrow. So I don't expect. I certainly can't see it getting above the monthly pivot. That's a given for me. Certainly won't be looking to trade that. In fact, I don't know if I'm too keen to trade this long at all at the moment, given those figures coming out tomorrow and the forecast for them to be very, very weak. So maybe I'm giving this a miss. All that, it's starting to look like a nice little trend forming, isn't it? That bar there might be significant. We'll see. So if I then have a look at the relative strengths, let's do that and see what exactly is happening. Let's do today. We can see that the Aussie, this is all against the dollar, mind you, is the best performer, but absolutely everything.
Right, we've lost Jeff, but I don't know if you guys have lost me. Jeff is in control of the show today, so let me just take this back. Can you guys let me know if you can still hear me? If you can't, then we're in trouble. You guys can't hear me either, right? Okay. Right. You might. Yeah. Okay. Cool. All right. Well, in that case, okay. Let me just tell Jeff really quickly. Okay, I'm just letting Jeff know to let the I just let Jeff know just to let the show run. I'm just going to make sure he's got that message. Just getting back to him there. Okay, he's going to try and find a way in without rebooting. Okay, cool. Right. So let's get our plans together now. Okay, cool. All right, we're okay. We're not in too bad shape. Let's get a little plan together. We'll have a roundup. Now I've got now if anybody's got anything else they want to look at, then let's bring it forward. I'm gonna quickly bring up Bitcoin as well. But we have FTSE, we have the euro, we have the Aussie CAD, we have gold. Now all these are going to be front and center for me, and so let's see if we can formulate some plans around these things. Now the FTSE, I think we've pretty much discussed. Now I wouldn't mind if you guys have got anything else that you're looking at. We can discuss those too. I think it's well worth bringing in any other charts as well. So if you guys are seeing something that I haven't seen, then do let me know. So the FTSE 100, we are looking for, just to round up, we're looking for the weekly pivots to be tested now. As long as there's nothing significant that changes between now and the bounce or the test of the weekly pivot, whether it be today, whether it's tomorrow, and when I say nothing significant, I'm talking about the possibility of that news story developing about Donald Trump and those tariffs. It doesn't seem like that's really developed into anything. The market and the charts would have told us by now. There's no way that we are more intelligent or more on top of things than the market makers are, and they have pretty much decided that that news story is a bit of a non-event as yet. So there's nothing breaking on that. So the market still is showing for upside. Hold on one moment. Okay, sorry, I was just seeing if I can see the headline about the EU, Trump threatening the EU with tariffs, but I haven't got the press release as yet. So we'll see how that's developing. But the market is telling us that that's a bit of a non-event. So I'm probably looking for. Now, if you are willing to take the risk, you're probably looking for a trade to the downside from the daily pivot. So yeah, looking for a downside, and then we're looking for upside. The best option would be let the market do its thing. Don't trade this to the downside. We've seen the probabilities, we've seen the market breadth. That makes the downside a real tricky trade. So let's wait and see if we can get this weekly pivot, and from the weekly pivot, as I say, as long as there's not something developing with that particular story or something else, we're okay to go to the upside from there. And what may bring us down there is the CPI or the probability of CPI